All right, good morning. It's Cowboy. It is 8:30 AM EST. We did just see some data hitting hot. We're going to take a look at the charts. Let me go ahead and jump right in right now. If you have questions, stuff you want to see, go ahead and talk about it in the comments. You should be able to comment from all of the different platforms. We got Rogue, my goodness. We have Rumble, we got YouTube, we got X, and of course, we got our private group as well. Private group would be a little bit easier if you commented directly on one of those three that I just named, preferably YouTube. Good morning, Cool Cat. All right, let's go ahead and share the screen. The data that just hit is going to be employment cost index. It's a quarterly number, and it appears that this was a dollar strong print, right? It was a little bit higher. Employment cost index was a little bit higher than expected. That means, if I'm not mistaken, that would be kind of an inflationary look, right? Let's see here. Changed the price of business and government, pay for civilian labor, actual greater than forecast, good for currency. So let's take a look at the actual chart and see what the dollar is doing. We flip away from crypto. We'll come back to that. Let's go to EURUSD. Okay, excuse me. All right, so yeah, dollar strong. So to look at the, we'll just go straight to the 1 minute chart just so we can see how the market is reacting. This is a pretty strong reaction. You see how it's really dropped down, and that was right at 6:30, obviously, or 8:30, I should say. Obviously, I wasn't trading that. I don't generally trade the news. It's pretty much impossible to know which way things are going to go. There are some methodologies as far as how to trade something like this, but just not something I do as a practice. I wait until the data comes out and the market digests it. And speaking of data, there is more to come. Okay, so we have right at the end of the private show here. So this show ends in, after 10 minutes or so. Sometimes we take it a little bit over. The private show completes the hour. So we complete an hour of this in another location on another planet Telegram. We have CB consumer confidence, and that happens at 10 a.m. EST, right? And so when we see that, that is, it's not, I think that's a monthly metric. Let's see. Yeah, that's a monthly metric, more or less, it seems. So consumer confidence is going to have a lot to do, of course, with inflation. The higher that number, the stronger the dollar. And again, dollar strong is going to push something like the euro down. It's going to push anything down that's traded against the dollar, and just about everything is traded against the dollar. Let's see how Bitcoin reacted. All right, so here it is. Not much of a reaction. I mean, it did, it pushed down a little bit, but Bitcoin is actually bouncing off of a pretty strong support right now. So Bitcoin did, as predicted, move down. Let me go ahead to a higher time frame here so we can look at what Bitcoin did. It grabbed liquidity, just like I said it would. For those who are watching my, mine and V's X, the Algo Factory X account. It's really the Algo Cowboy X account, whatever. These liquidity nodes were grabbed before price went down, and price did want to go down. And I've been saying that I've been kind of predicting a range. Let me go to the daily here. Hold on. This is not the time frame we really want to see here. So I've been predicting the possibility of like this mini range kind of developing towards the bottom of this multi-week range. Really, actually, this is a multi-month range. Going back to the all-time high, you could even say this goes back to early March. And I was predicting, and it's not quite verifiable yet, maybe not, I don't know, it's hard to say, but it looks like there's a mini range developing kind of in this lower half right here, which, it's just basically saying below the midpoint of the greater range. So this is very reasonable. The price may bounce off the bottom of this. Also, we do have here some very strong bounces at about 60,000. 60,000 has been protected so far. And this move down that was pretty strong last night, overnight, that already is being rejected to the upside. So this is such a, this is a daily chart. It's high time frame. So the news, today's news anyway, in markets is probably not going to affect it very much. If the effect would have been to push it down, and we saw it on a very low time frame that it did, but it's, I'd say, almost irrelevant now. the market is probably going to slow down, right? Because we got tomorrow is FOMC, and FOMC is when Fed Chair Powell comes out. Federal Reserve Chair Powell comes out. I like to call him Chowell. Chowell comes out, and he is going to talk about what the new interest rate is, right? Whether or not they're going to change the rate, keep it steady. I know a lot of people were talking about cuts, and there was this kind of conversation of, well, we're going to need to cut the rates. It does seem, though, with all this dollar strong data, that we may not see a cut. We might see a pause this month. A hike would be a little unexpected, but not completely unexpected. With all of the inflation numbers being a little hot, it might be that it's like, hey, we actually need a hike, and that would be a bit of a surprise, I think, to most of the market. I have not been looking and paying attention. I've been looking at like Zero Hedge or wherever people look, Bloomberg, whatever, to try to determine based on the sentiment what is going to happen. I'm just going on my own gut right now. My own gut says we'll probably see either a pause or a surprise hike, but I really doubt we're going to see a cut. And I doubt we're going to see a hike. I think it's just going to be a pause. Let's see if we can peruse the hedge real quick and see what Zero Hedge says. They're usually pretty accurate. Okay, U.S. futures dip on last day, April. Okay, no data just yet. Let's see here. Okay, DXY, Amazon News Market. Okay, so I bet you throughout today we're going to start to hear. I'm going to hear more about what they think about the hike, right? So nothing yet, though. Nothing yet. Not on this, not on that platform anyway. So let's go ahead and stick with the charts. I don't have any requests in any of the chats yet. Pretty quiet morning. We do have a handful of people watching, but no request yet. So I'm just going to move over. Well, first of all, like I said, I do think we'll see a range develop. There's a decent chance we'll see a bounce right here off of 60,000. If not, let's take a look at the liquidity really fast just to see. Okay, that's Ethereum. Let's see what that is. Ethereum liquidity is to the downside. So let me take a picture of this. We can save this here. Okay, we'll come back to that. Let's go to Bitcoin and see what that liquidity looks like. Okay. A lot of liquidity to the downside right now. There's a lot of liquidity that price may want to go grab. And this is relatively new. I think a lot of the market is betting on the price going up. And to the upside, you're looking at about 65,000 and 66.5. So those are two strong areas where price may go. So let me get rid of these and we'll start fresh. So we got here 64. Really the bunch of it is going from 64,850 to 65,250. So 64,850 to 65,250. So kind of like this and like this. Okay, and then the next block of liquidity we're looking at this is all to the top side. There's a lot to the downside. Downside's almost just like one solid block, but we got 66.3 to 66.8. So 66.3 to 66.8. Just do it the easy way here. To 66,800. Okay. All right. So again, right inside of that range, if price does bounce up, we got these liquidity toward the top. The charts do have to call for move up. And right now the charts are kind of neutral. They actually are calling for a move down, but we do have this strong support that we keep talking about where price continues to get rejected to the upside, right? These three wicks right here around 60,000. So if 60,000 is protected, chances are price would go ahead and bounce up like this. Probably we'll see about it. If price does break to the downside, which is another very possible scenario, the first, like I said, all the way through 50,000 area, at least from like 52,000 to 60,000 is a bunch of liquidity. But let's talk about, say, 59 and a half, 58, 56 and a half. So 59 and a half, 58, and 56 and a half. Those are some near numbers. There's more. Let's see here. We got 54 and we got 52.3. We'll let that be what we're going to see for now. Okay, because there's more. There's plenty more in the low 50,000 range. Lots of liquidity, but those are here's the thing about it. Like, unless there's a crazy drop that happens really, really quickly, then if that drop does happen, we should have time to take a look at that lower liquidity. But that first liquidity is going to get eaten up, and you're talking about massive moves. I mean, there's like 51,000 and basically 50,000 just below that. So, but chances are by the time it gets there, these liquidity nodes may have changed, right? So, but yeah, it's just there's a lot of liquidity to the downside. So whatever direction price favors, these are the areas where price is most likely to go. And right now, if somebody had to, like, let's just say, hey, gun to your head, what do you think is going to happen? I need to review the algos really quick. It's actually, I mean, to be honest, it's looking pretty bearish, right? So, I mean, I would guess the price is going to head down, but here's the problem with that. Now, I can't get into details on the algo itself, although people over at Algo Factory know what I'm looking at as far as downside support. Besides price action, there's something in the algos that we'll talk about here shortly, where I've got two pretty strong reasons where price, if it does go down, it shouldn't go down immediately. If it does go down immediately, it'll crash, like, most likely. But right now, I think it does have a lot of resistance to fight before it breaks below this. So, I don't dive into shallow pools, right? I'm not going to short when you have all this super strong support right there. But if price does break below these wicks, which is like 59 and a half, then I'm going to be very interested in these lower targets at that point. But until price breaks below these wicks that I'm about to outline right now, price has to go below that before I would be interested in shorting. So kind of a no man's land unless the charts favor a move up. And at the moment, charts do not favor a move up in Bitcoin. That's the end of it. So, all right, guys, heavy look at Bitcoin this morning. I hope it was helpful. I didn't see any requests as of yet. Everybody's kind of quiet right now. I know the market is boring. So this is the time to practice. This is the time to hone your craft. If you're at Algo Factory, this is the time for you to be backtesting and developing your algorithm. There are going to be 3 years or 2.5 years of nothing in crypto. Once the bull market is over, right? Unless the world has some very big changes, then and unless crypto has some very big changes, which it may, there's a good chance that crypto is just not going to be doing much. And what are you going to do during that time? You're not going to be able to just buy and hold. You can buy and hold for about 1.5 years. That's the only time you can do that. So everybody gets excited about crypto, but they don't want to do the work. They just want to buy, hold, and pray. Look, if you don't want to buy, hold, and pray because that 1.5 year window is over, come to Algo Factory. We'll show you how to profit in sideways and down markets. It's what we do. We're over at algofactory.tech. You can zap the QR code in the right-hand corner, the top right-hand corner. Algo Factory, trade your job, upgrade your life. We're going to go ahead and end this here and now. Go over to the private show. We hope to see you soon. Leave comments, like, subscribe, all that neat stuff that, all that YouTube-y type things that people say. And we will see you mañana. And come in with questions. We'll answer them. That's what we do.
Join us or die.